All right. It's a great day in South Florida. My name is Chris Igoe. Welcome to Living South Florida. If you're new to the channel, welcome aboard. And if you are a returning viewer, I appreciate you continuing to participate in my journey. And I love you all. But today, let's get right into it because mortgage rates have exploded and they are continuing to surge as the housing market crashes. So today I'm going to do a deep dive and expose what's happening right now in other markets, which provide us with leading indicators so that we can make the best decisions for ourselves, for our family, and our financial bottom lines as it relates to the real estate and housing market. Because unfortunately, real estate and the housing market is the last domino to fall in the economic cycle. And make no mistake, we are in a recession. How long, how severe, how painful, yet to be determined. However, the government and politicians, and even some CNBC commentators, won't even acknowledge that we are in a recession right now. And I just did a video talking about the Fed is lying, which you should also check out, and it will follow this video. I am committed to creating the most comprehensive content so that you can go out there and make the best decisions for yourself, your family, and for your financial bottom line. And I'm emphasizing leading indicators, things that are happening right now, market actions and reactions, give us a lot of information so that we can read the tea leaves as to what is very likely to happen in the near future. Now, I don't say that to scare you. I'm not trying to talk you into or out of doing something that is right for you, but I want to ensure that you've got the best information, a full macro picture so that you can be empowered and informed. As of right now, it is pre-market, but I want to look at what some of the markets are telling us. But I want to use the market indicators as a guideline for what the market sees. And I'm talking about the stock market and the bond market right now. I want to see how they are digesting the inflation numbers, which were just released. And the inflation numbers were terrible. And the inflation numbers weren't even accurate. The numbers that are being reported are shown through rose-colored glasses. They're not the most accurate numbers. Back in the day, I was a stockbroker for 18 years. And I've read your comments. I know there are haters out there that are going to say that I failed at every career and that everything I say is complete garbage. Well, that's not for me to decide, but if that's what you think, then bye, Felicia. But nonetheless, none of that's true. You can think what you want, say what you want, but haters are going to hate. You're not going to dissuade me from my mission to tell the truth, take real data and apply it the right way as I see it so that you can be informed, empowered, and make the best decisions for yourself, for your family, and for your financial bottom line. But let's get into it right now because the pre-market activity is telling us that the market does not like these numbers. And what you can see here is that the stock futures fell as Wall Street heads for a losing week. And FedEx is giving a warning. That FedEx warning is a leading indicator that we must be aware of. What the indices are telling us is that there is weakness and selling off going into the open. So the Dow, the S&P, the NASDAQ, the Russell, they are all breaking down technically. And if you've watched any of these markets over the last year, you've seen the continued downward movement. And markets trade. So irrespective of market conditions, the market is always good for someone. Bulls make money, bears make money, but pigs get slaughtered. I'm not a pig, neither are you, so we don't need to worry about piggishness in this market. But we must be aware of what's happening and what the leading indicators are telling us so that we know what's going to happen in the future. I've gotten some heat in the past talking about interest rate predictions and mortgage rate predictions. But it was clear to me several months ago when I first started talking about it that mortgage rates and interest rates are going to go higher. And full disclosure, I'm not a market timer. I will never nail exactly when that will happen, and neither will anybody else. But it's obvious to me that the trend is not our friend. When the CPI numbers came out and inflation came in hot, first thing that happened was the bond market went nuts. And without getting too technical and boring everybody into not watching any further, I'll summarize it by saying the bond market has a direct impact on mortgage rates. And the Fed funds rate is a direct correlation to mortgage rates. And there have been a lot of people out there that have been saying that inflation isn't as bad as we think it is. It's under control. It's transitory. It's going to come down. And they anticipated a different number than what was actually released. And when it came in hot, the market instantly priced in this bad news, anticipating much bigger moves from the Fed. And so with that, what do we see? We see that mortgage payments are up 66% from a year ago, and that rising interest rates and elevated home prices are pushing more new buyers out of the market. And you can see to the right of the screen, the market does not like that. No bueno, not good for business. Now, it's interesting that the embedded video is talking about the railroad strike that was averted and that a tentative agreement has been reached. Absolutely going to talk about that as we continue, because that railroad strike and that supply chain disruption would have a massive impact on our economy and the consumer, and the fear and uncertainty and pain that everyone will absolutely feel. But it looks like that crisis was averted, at least temporarily, so fingers crossed. But make no mistake, things are getting worse, not better. Let's get back to leading indicators. FedEx, which is a massive global multi-billion-dollar company, missed estimates on revenues and earnings in the first quarter, and they withdrew their full year guidance, which is a fancy way of saying they have no clue what their revenue or earnings will be as we move forward, because the CEO believes we are in a worldwide recession. And meanwhile, our government isn't even acknowledging we're in a recession. And I suspect it will take them 18 months to admit that there's an elephant in the room. But that elephant 18 months from now will have crushed a lot of people and created a lot of pain, and very likely crashed the housing market, the stock market, and increased joblessness to the nth degree. Now, I've done lots of videos in the past about inflation and the housing market and the recession, but here's something that you might not know about FedEx. The delivery trucks that bring your packages to your house are independently owned subcontractors for FedEx. And the massive inflation and increased gas prices has many of them on the cusp of being insolvent, on the cusp of going out of business. I'll say it differently. The parent company, FedEx, does not have the delivery arm to deliver your packages. Then FedEx takes a massive hit, which is what they're telling us in this statement. But separate to that, all of those subcontractors that deliver the packages on a daily and hourly basis will be unemployed. And if there is a massive unemployment problem, and if mass unemployment is a real thing, well, then people don't pay their mortgages. And when people don't pay their mortgages, we have foreclosures or distressed sales. And will this impact everyone the same way? No, it won't. But it's going to impact a lot of people negatively. But it's impossible for that not to impact the housing market in a very negative way. Now, I just did a video on Bank of America and their new subprime loan program. And I've done a lot of content talking about subprime loan and how they create a housing bubble. But banks want to get paid, and they don't care how they get paid. Interestingly enough, one of the biggest offenders in the subprime loan crisis was Citibank. And guess who's back? Back again. Citi's back. Tell a friend. They don't want to miss out on the gravy train, and they're not. And now, just like Bank of America, they're creating a subprime loan program, which is great if housing market prices only go up, but that's not what happens. Now, once again, the media is spinning this program into a narrative that creates more division rather than unity. But at the end of the day, this comes down to a program based on subprime borrowers, meaning they don't have savings, they don't have assets, they don't have good credit, and they're at significant risk in a housing downturn. But Citi plans to expand a program that aims to eliminate key barriers to home ownership, particularly with regard to cost and affordability. And it's launching 2 new programs aimed at giving more credit access to people with limited or no credit information, as well as providing access to capital to small business owners in Los Angeles. I got news for you. These might be 2 test pilot programs for right now. Banks are in the business of making money. And I suspect these pilot programs or starter programs or test programs will be national at some point soon, which means we have a new wave of buyers, that are subprime borrowers, that are at massive risk for a housing downturn. So no bank or institution or lender wants to miss out on that gravy train. And Morgan Stanley is saying that the rise in interest rate has hurt mortgage demand. Well, no kidding. So let's create subprime loans so that demand doesn't get hurt. Well, the definition of insanity is doing the same thing over and over again and expecting a different result. And you would think that these big institutions and these big banks and these big lenders would have learned from the past, because Citigroup got whacked with a $7 billion settlement to settle subprime mortgage investigation. And you'd think these banks would learn. They don't. And what's more telling is that billions and billions of dollars of fines didn't even leave a mark. They don't even remember it. And they're doing the same thing all over again. So Bank of America, Citigroup, JP Morgan, Wells Fargo, $25 billion fine. JP Morgan, $13 billion fine. Every one of these banks was drinking the subprime Kool-Aid. Aurora, Bank of America, Citigroup, Goldman Sachs, HBC, JP Morgan, MetLife, Morgan Stanley, PNC, SunTrust, US Bank, Wells Fargo, $9.3 billion. Bank of America, $8.5 billion. Mind you, they've been mentioned in each of the other fines too. And honestly, I'm not smart enough to add it all up in my head. But the truth is, billions and billions and billions of dollars of fine didn't teach them anything. And I won't continue with the list because I think I've made my point. But they're back and they're doing it again. And that creates tremendous risk in the housing market. And over time, it's guaranteed to create a subprime loan crisis. I'll leave the banks alone for a second, but please understand that the subprime hit is in. It's growing and it's real and it's a problem. Now, I know that there are plenty of real estate professionals out there that will tell you that it's not the same as last time. There are plenty of real estate professionals out there that will go ahead and tell you and point to history and say that relative to other times in the past, we are still at affordable lending rates. And if you trace back the interest rates, that looks to be true. My parents' first mortgage was something like 17 or 18%. But if you're only looking at that, you're only looking at half the equation, because home prices back then were significantly lower. And today, in many markets, we're still at all-time highs. So unlike the past, when interest rates were high and home prices were low, today we have interest rates skyrocketing. And please remember that I'm on the record as stating that it wouldn't shock me if we're at 10% by the end of the year. Because wait and see what Jerome Powell does next week. I wouldn't be surprised if he comes in at a 1-point move rather than a 0.75 move, which means mortgage rates will explode. So right now, we've got an economic problem that must be fixed, it must be addressed, and it's global. And we've got banks reverting to their old form in order to keep demand alive. And that's not good. All right, I'm done preaching. Let's get back to leading indicators that exist right now. Bed Bath & Beyond. They're closing 150 stores and they're laying off employees. And you can see on the map where those stores are located. I want to see what corporations are doing right now today to understand what the future will look like. And as I've talked about in previous videos, they're firing their employees and they're taking on more debt. $500 million in new financing. Well, I wonder if they'll be able to service that debt in the future. And when they can't, like many companies won't, just like Lehman, just like Bear Stearns, they go poof, goodbye. And we're already seeing mortgage lenders go out of business. You can go ahead and bury your head in the sand, as many people do. And I've read the comment. There are plenty of homeowners in Florida that choose to ignore what's happening right now. Swear with their hand to God, their real estate market and their housing market is just fine. Well, everything's fine up until it's not. So I implore everyone to be empowered with real information so they can govern themselves accordingly. And make no mistake, it's always a good market for someone. And there are plenty of people right now in today's market that are very happy to buy homes. And conversely, there are plenty of sellers that want to sell now. And if you're thinking about selling now or waiting, then I beg you, please take your head out of the sand and start looking around, not at what's happening in your market right now, although you need to know that too. You need to look everywhere and see what's happening right now. Look at the leading indicators because they tell you everything you need to know. Which finally brings me to some good news. And to be clear, I don't look at news as being good or bad. I look at it for what it is. You take the good, you take the bad, you take them all, and there you have the facts of life. That's what this is. It's the facts of life. No good or bad. There's no such thing as a good or bad market. It's always good for someone. News is neither good or bad. It is what it is. And you must be empowered by what's really happening in real time in order to make the best decisions. But finally, we got some good news. What you might not know about, there was about to be a massive railroad strike. And truthfully, I don't think about the railroads ever. Actually, that's not true. I think about the railroads at Christmas time because Brightline creates a Polar Express, and I love participating in that with my children. But outside of the Polar Express, I don't think about railroads ever. If there is a major railroad strike, then there is a massive supply chain disruption, which means the next time you go to the store, there's nothing there, or there's very little there. And the panic that will set into the economy is limitless. And the impact that will have on affordability and prices for basic goods and services is exponential. But thankfully, somebody got it right. And Joe Biden called this a big win for America. And I don't disagree. This is a big win for America. And we need a win. And we finally got one. Now, I hope you found this content valuable. And if you did, please subscribe, give it a thumbs up, share it with a friend. And if you're outside of my market and you're thinking about making a move and you want to consult with a professional that we know, like, and trust that can serve and support you at the highest level, irrespective of market conditions, then please opt in for a referral and we will get you set up right away. And if you're unfamiliar with South Florida and want to know everything there is to know about every city in South Florida, then please opt in for our free city/relocation guide and we will send you one right away. And if you're even thinking about moving to or living in South Florida, you've got to give me a call, text, DM, send a carrier pigeon, a smoke signal, by any means necessary, because we've got your back when it comes to moving to or living in South Florida. And until next time,